Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of SBS and now the Deputy CEO of 74Software, Eric Bierry. Great to have you with us.
Hi, Elliott. Super happy to be with you.
Okay, so before we get cracking, we are going to learn a little bit more about 74Software. So, Eric, this is the first time we've had 74Software on, and there's a very good reason for that. Namely, it's only a few months old. So tell us about the company's birth and the main areas that the company is now focusing on.
Yeah. So birth date is 2nd of September last year. So as you said, a few months, 6 months ago, 7 months ago. And the rationale behind was just to build a software company and a sizable software company, I would say. So meaning that we are 700 million euro dedicated to software today. And there are two parts. One part, which is the old SOPA banking software, so SBS today, dedicated to the retail banking and also the asset finance activities for our clients. And the second part is Axway, and keeping also the brand of Axway, which is dedicated to everything around the data, meaning transferring data, securing data, exposing data through APIs. So that's the two positioning of the company. And 74Software is the group. I would say it's like a constellation software, if we may call it. And the idea is to bring together forces to deliver very robust software activities.
And I mean, you've given us a sense of kind of, I guess, the complementary areas of the two companies that made up the merger. Was it just very simply because sometimes you get mergers in order to cut costs if there's a lot of overlap, but I get the sense that there's not a huge overlap, and this is really about making the whole bigger than the sum of its parts to create a bigger company that's perhaps able to compete more against other bigger companies in the areas in which you excel.
Yeah, definitely. You know perfectly that data is at the center of everything, right? So when we are looking at the best way to combine, SBS is processing data for its clients, and Axway is moving the data and securing the data. So the key question for us was, of course, not synergies from a cost perspective, because there is more or less no overlap. But what's the new value proposition, especially for banks? We are able to provide leveraging these two capabilities. And we see that when we are looking at open banking, for example, or when we are looking at AI, we see immediately what should be, could be, and I hope will become the real new joint value prop. But of course, only 6 months ago, so we are still working on that. But we see the first benefit on that approach.
Okay, well, I'm sure we'll talk a lot more about AI a little bit later on. But as you say, you're the product of this merger between SBS and Axway. Maybe you can give us a sense of the size and scope of the business as it now is today in terms of, it's all you're publicly traded. So I guess you're not going to be telling me anything that I couldn't look up, but maybe just from the horse's mouth, so to speak, you can give us a sense of the size and scope of the new company.
So first, we are spread across the globe, so which is something very, very important for us. So North America is representing 20% of our total revenue. Of course, our story did start in France, and France is still representing more than 25% of the total revenue, but we are also present in the rest of Europe. We are doing also 80 million in Africa, and we are doing 20 to 30 million also in Asia. So meaning that we are spread across the globe. From a value prop perspective, of course, having 700 million only software revenue and mixed, I would say more or less half between the banking software activities and asset finance activities on one side, and the technical product, if we may call it like this, around the data, as with the same size. So that's more or less the way we position it. Of course, on SBS side, we are working only for banks and financial institutions. It's 100%. On the Axway side, historically, it's roughly 50% of the total revenue of Axway. So the joint value proposition is going to come within that 75% total revenue of this new group. But of course, Axway is going to continue to innovate and to deliver value around the data for the other verticals.
Okay. And I read in your earnings report, I think it was your pro forma earnings report for 2024. It was talking about how 74Software is envisioning a future of dynamic growth. It said driven by both organic expansion and strategic acquisitions. Where might we see these acquisitions, and what kind of war chest does 74Software now have?
So without giving a secret, of course, we know that the Axway business, the market growth, and especially when we are looking globally, it's 1, 2, 3, 4%. Okay, so meaning that organically we are not going to make a huge difference in terms of total revenue. The banking business, we are more between 3 to 6% if we are looking at the growth from the market for that sizable businesses, I would say. So meaning that we did announce officially to the market that by 28, 29, we would like to cross the 1 billion revenue in software. So if we do apply with our existing figures, and as you said, this will not be only organically. I think I can say in 25, nothing is going to happen because following that transaction, we need to deleverage our debt and it's quite official. And we know that we should be able to go to the shop, I would say, starting 26. And we have two options and we are studying. One option is to bring additional added value to our existing portfolio. The second option is to potentially discover a new vertical, such like insurance or pharmaceutical or many others. So personally, I think that we are still at the size where we should be increasing our portfolio in our current vertical. But it's too early stage. But for sure, our willingness to cross the 1 billion in the next 3-4 years is very critical because I think that the software company today, with spread across the globe, should have a sizable position, and 1 billion seems to be today a very important milestone.
And just briefly, if you can, Eric, given the uncertainties over trade and tariffs and the potential impact on economic growth, how do you insulate yourself as a company from any potential headwinds?
It's it's a difficult question, and the last 12 months, I should say that more frequently than before, we are asking this question. Last event also in North America is forcing us to find, I would say, the best way to mitigate that risk. So first, the two different positioning are following market trends, which are different. So it's helping us to mitigate the risk. Second, the geographical presence. We do not see today in North America the business slowing down. It's not the case for consulting company, for example, but on the software today, it's still very important as we do have workforce and an important size of workforce today in North America. Today, it's preventing us short term, I would say, to face a major issue. And the third reason is even in banking activities, we are looking for retail banks, and we know the situation for retail banks in many different geographies. But we are also working a lot on asset finance and especially around the auto finance. So that ability to have that portfolio is protecting a bit us, I would say, to secure the medium-term vision. And in parallel, we have the chance to be really very close to the core business of our clients. So meaning that today, when they are cutting costs or when there is uncertainty, usually the part which is linked to their core business is less impacted than the other activities. So we are positioned today with that benefit in front of the market. But let's make it clear, on a weekly basis today, we are watching in detail what's happening and of course following our client, because our client also are very critical in the way we are looking at the situation.
Never a dull moment, I'm sure. Okay, so look, we've heard about 74Software. Let's now learn more about Eric. So, Eric, you've been with what became 74Software with SBS and now 74Software for some, 14 years, I think it is, which I guess is a lifetime in financial services. Are you just especially loyal, or is it like finding a perfect life partner? You know, once you find them, that you really don't need anyone else?
So for financial services, it's even more than 14 years, I should admit. But 14 years within, I should say, the same shareholder, even if we are public, but there is a family office behind us, and the same family office than the one behind Soprasteria. And working for a family office is a bit different than working with PE-backed companies or with the real private company. What's different is looking at the medium to long-term vision. So meaning that this is giving you many opportunities from M&A perspective to discovering different kind of job inside the organization. So all of this, I should say that 14 years is a small life finally, because this is plenty of opportunities, especially when you are trying to build long-term relationship. And our DNA in the company is to build that long-term relationship. There is no big bang popping up at the corner of the road every morning. So meaning that when we do engage with a big name, this is to be engaged very long term. And I think that family office approach, and I think it's not only this one, but on a global perspective, is giving that ability to drive that long term relationship. So that's, I think, the reason behind.
And I mean, now the company is kind of so much bigger. I mean, how do you manage to remain kind of agile, almost as if you were kind of helping to run a fintech or something along those lines? How do you manage to keep that mindset while working for a much bigger company, which of course is publicly traded, which gives you extra things to worry about?
Yeah, and especially we need to position our result every quarter, and we need to be very, very predictable. I would say there are two things. One is, and quite early stage in both companies, Axway and SBS, we did set a vision on what's mature and what should be innovation. So there is word behind. So it's incubation zone, performance zone. So it's not new. It's from Geoffrey Moore. And when we are applying that kind of approach, the operating model and the way you're incentivizing the people is completely different. So meaning that on incubation zone, you're looking at very short-term results on a weekly basis, monthly basis, and you have to bring something like a startup mindset. Of course, the way to survive is not exactly the same, but we need to incubate that kind of vision and that kind of perception. So I think that's one of the reasons. The second is, I think we need to follow our clients, and following our clients is also making a huge difference, because when we are obsessed with their, I would say, with their success, we don't have any other choice than being super close to them and starting to innovate with them. And even if we did spend a lot of time in financial services, the experts on financial services are our clients, and we are there to enable the technology to make them even more successful. So meaning that when we are able to incubate together or to build an ecosystem with also fintech and other player, it's not a competition, it's cooperation and co-petition, I would say. And if part of the organization is able to stay within that environment and ecosystem, then you're able to stay agile. Of course, on mature products, it's the robustness and the predictability, which is very important for us, but also for our clients. So the key is combining these two environments and keep people very focused on each part.
And Eric, one imagines the last 12 months or so have been even crazier than usual for many business leaders. And I know that no one really kind of clocks out these days thanks to hybrid working. But what can Eric be found doing when he's not being consumed by work-related things? I know you are still getting to know Spain, which I think you moved to a few years ago.
Yes, we took the decision to move to Madrid 4 years ago. And I should say, even if the last 18 months with the transaction, as you can imagine, it was really busy, but I wanted to discover the Spanish culture, and there is a lot to learn, including the language, by the way, because I did German and English first. So discovering Spanish seems to be very easy, but trust me, maybe it's the age and being occupied, but discovering a new language and new culture is really, I would say, super interesting. But it's taking time, and I do enjoy a lot. Yes,
And Real or Atletico?
I'm Real.
Okay. All right. Well, apologies to any of our Atletico fans who are watching. So look, Eric, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with the Deputy CEO of 74Software, Eric Bierry. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Eric, let's talk about the future of finance. So, Eric, look, over the years, you've overseen digital transformations at countless banks and financial institutions. We're now in the year 2025. How much more is there to do?
I think when we are looking at the end clients of banks, being individuals, being corporate, being SMEs, there is still a lot to do. Still a lot to do because none of them are considering that it's personalized enough for them. And I think it's a very critical topic because there were a lot of investment moving to the cloud and trying to standardize, spreading a lot of APIs and saying that we are personalizing for the end client. But the reality today is, compared to what we should be able to do technically, including AI, the level of personalization is limited. And I think that's the era where the next 3 to 5 years, banks, financial institutions, they need to make a huge difference.
And I mean, likewise, in terms of the open banking revolution, we've seen massive changes over the past few years. Certainly, it varies from country to country. But again, you work across the world. Where are we seeing the most progress? Where have we seen things stall? And where have we seen things perhaps not making any progress at all?
Open banking, by the way, is one of the first joint value proposition between Axway and SBS. So I love this example. I should say, and I'm going to surprise you, but I see North America accelerating. So many people are saying, wow, the Trump administration is removing all the regulation around open banking. But the good news is there are two good news for me in North America. The first one, they don't know what's instant payment. When you transfer money in North America, everyone is used to wait for 2 days, even if it's within your different personal accounts. That's a reality in North America. Second, the North America is looking at what's the value-based approach first. And it's every time the first question. So bringing a regulation just to force all the banks to be compliant with the standard, I think in North America is not working. And even if giving a standard is helping, but there was already some kind of standard already in place in North America. So today the banks are considering that they have to find a way not to copy-paste PSD2, not to copy-paste even PSD3, but also not to copy-paste instant payment. But they know that the speed of the cash and the way to give with a shorter timing approval for loans or for liquidities should be making the difference. And it's a large part where they do see today that they are late compared to Europe, by the way. And I think that they're going to accelerate, even if they're going to look only at themselves, and it's part of sovereignty. But when I'm looking at what we do in Europe and PSD3 and around the payments, that sovereignty is also looking at a very Europe-centric strategy. But I think that from a business perspective and the way companies like us are able to bring and to enable that added value, I think for us, it's plenty of opportunities for the coming years.
So you're optimistic that the kind of lighter touch regulation that many people hope to come from the Trump administration is going to come about and will be beneficial for companies like yourself?
On that topic, definitely. On many other topics, it's very difficult for me to answer. Let's make it clear. But on this one, and even if I'm looking at the auto finance business, which is a big business for us, that deregulated way and that willingness to bring sovereignty at the end, that's what this administration is doing. We think that it's opening opportunities. This will give also difficulties on many other domains, I'm sure. But looking at this one, I think it's an opportunity, yes.
And again, this is my probably my last question on the Trump administration, but there's also hopes that perhaps, certainly from corporations, I wouldn't necessarily say from consumers, but certainly from many corporations, that there may be less tough rules and less scrutiny of potential mergers. Do you think that's likely to happen? Mergers and acquisitions will be less scrutinized, and therefore we're likely to see more of them?
It's a very difficult question. On one side, I follow what you say, and especially because when we are looking at the European enterprise valuation today, it's very low. So this should be opening a lot of opportunities in terms of M&A, in terms of build up, and I'm convinced that this should be happening. Um, but the biggest player within the private equity today are American, and the uncertainty, um, not generated by the Trump administration, but generated by the politic itself in Europe, is not giving them a lot of willingness to put a lot of money within the European continent. So there is that situation, mixed situation, but definitely the valuation of companies in Europe today, and especially within our environment, are at the lowest we ever seen, and meaning that this should be opening a, a lot more, I would say, transaction, um, but maybe without having the huge money coming from the PE firms from the US.
Right. Okay. And I mean, you've touched on artificial intelligence, AI, a couple of times, but of course, the hype around AI is refusing to die down. And as a technology, it's still promising or threatening to make the world of finance better for banks, financial institutions, and their customers. What's it done so far? What are the kind of the biggest achievements, if you like, of AI in your space? And what are your hopes, expectations, concerns for what it will do in the future?
Um, on our side first, because we wanted to apply it to ourselves before going and visiting our client to tell them the way they should be leveraging AI. When it's new like this, it's very difficult to come and just to explain to our client the way they should be leveraging it. Of course, in the way to develop, build software, the way to drive documentation, the way to drive better quality, especially on the end-to-end testing and testing automation, we see the first result. Let's make it clear, it's recent, and even if we don't need a lot of time to implement and to test, this is taking time really to industrialize it and to anticipate what are the real impact for our people in terms of number of people, but also in terms of skill of people. And I think the biggest impact is on the skill of our people. When I'm looking at the business, and again, we need to follow and to understand really where banks want to go. Many of them consider that they do master a first level of AI. So, and by the way, they did historical AI on credit and risk analysis for a long time. I think their hesitation today is definitely linked to the human workforce impact. They are not ready to suddenly divide by three the number of people in the back office. And even if many of them in some Anglo-Saxon countries, they are very keen to outsource that part, but they are not very keen to take the risk, definitely to have a large part of these back offices replaced by AI. So that's a reality. Does it mean that in 3 to 5 years, this will be the same? To be honest, I don't know. But from a technology standpoint, they're ready. But this is processing, this is back office. And as I said earlier in our discussion, I think that the biggest benefit or expected benefits should be in the hyper personalization of the services for the end client. It does not mean that we need to bring a lot more complexity within the information system. It means that the information system needs to be ready to give the good data, real time, easy to access, to enable these AI services, and then to give that hyper personalization. So we call it internally how to help banks to augment their clients by a better usage of the services they are able to provide. And I think that's really the challenge. And we did have some proof of value, let's call it like this, with some clients without changing their technology, but just to see how to enable that hyper personalization. It's very early stage. There is a mix of UX design and technical in front of the business expectation. First result, very early stage.
Okay. So look, Eric, it's time now for our round of rapid fire questions. Are you ready?
I am.
Excellent. Okay, so I've got 90 seconds on the clock. We're going to get through as many of them as we possibly can. Just one word answers is all I'm looking for. I'm going to start my clock and then we will begin. Okay, so what fintech segment has the biggest potential over the next 5 years?
Lending.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Speed to execute and to answer.
Are bank bosses ready for the AI revolution?
Boss are ready.
Are customers ready?
They do not see the benefit and they see the risk.
One word answers, Eric. One word answers.
No.
Are regulators in the EU and US, are they keeping pace with all the new possibilities and behaviors we're seeing in the financial industry?
I don't know.
Have you personally ever invested in crypto?
A little.
Are physical points of sales part of the future of finance?
They are.
Are bank branches part of the future of finance?
They are also.
On a scale of 1 to 10, 1 being the lowest, 10 the highest, how likely is it that the following are going to happen in the next 10 years? That one of the neobanks will be as profitable as a top-tier legacy bank?
8.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US or EU?
10.
That you'll be able to open a crypto account at a top-tier bank?
6.
And that SWIFT will still be the main tool used for transferring money around the world?
3.
So, 3. Okay, wonderful. Well, Eric, we are out of time for our round of rapid fire questions and also out of time, sadly, for our conversation. So I really just want to thank you, the Deputy CEO of 74Software, Eric Bierry. Thank you so much for joining me today. And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.